Welcome to Quartz Smart Investing. I'm Merrill Brown. Our guest today is Carin Pai, Executive Vice President, Head of Portfolio Management, and Head of Equity Strategy at Fiduciary Trust International. Carin, welcome back.
Pleasure to be here, Merrill.
Among the critical market issues this week is the challenge of Fed policy and the interest rate risk. How should the public view Fed decision-making in terms of their own portfolios?
So I think the expectation that the Fed might keep rates higher for longer is definitely putting some downward pressure on valuations for equities. So I think that this is something that investors have been paying attention to, and it's been what's driving the markets for a greater part of this year. As we continue to think about higher interest rates, investors are thinking about how it would impact corporate earnings in terms of profit margins, and also how higher interest rates will impact consumer spending. And we do expect that the economy will continue its path to a slowdown.
Why has the market been so slow over the course of Q3 and clearly moving into the end of the year, especially when many forecasters were saying we had a 5,000 S&P ahead of us by the end of this year?
In the quarter that just finished, there were some temporary factors that boosted GDP. And I think investors have been sort of baking in some of these higher expectations. The economy has been quite resilient of late. So I think that that's a positive, but it has also fed into the expectation that the Fed has room to continue to sort of hold interest rates higher. And that's really what's driving markets. And so I think we were also coming off of a point after the second quarter where the stock market was trading at essentially a pretty high valuation. And with higher interest rates, the valuation on equities compared to fixed income is much less attractive. We're looking at the relative valuation of equities to fixed income, looking at things like the equity risk premium that suggests that investors aren't being compensated enough to take risks on equities.
So what about the fourth quarter? Any hope for a boomlet or anything that will turn things around?
So I think we've seen a fairly reasonable correction here. And the NASDAQ, for example, is off about 10%. You've got the S&P that's down in sort of correction territory as well. And we've seen a rotation in the market where we have some of the growth stocks actually giving back some of the strong gains of late. I do think that at some point, some of what has been really doing well in the marketplace in terms of the rally, some of these technology stocks, in terms of earnings, they are the ones that are contributing to earnings growth for the market. I do think that these companies that continue to deliver on growth will do well as we look forward.
Next, Carin Pai on the kinds of high-quality companies she's investing in as the year winds down.